Hi everyone, welcome to the weekly market analysis video. Thank you very much for stopping by. As always, I would be sticking to analyzing the S&P 500 futures. Ticker symbol is ES. March 2023 contract is the current ongoing one based on both candlestick pattern view as well as the market profile view, which is what you're seeing here. Without further ado, let's get right into what happened last week after I posted my last week's video. And what are the possible opportunities for next week. Let's jump right into it. So last Friday on January 27th, I had posted a video saying that above 4109.25 is going to be bullish and below 4082.5 it's going to be bearish. So on Monday, this week's Monday, we had opened with a gap down, filled the gap, and then closed near the overnight low, creating a new spike to the downside. Spike means insufficient time to retrace back to the mean of the distribution. So if you notice, most of the distribution is like a D on Monday, and then we closed almost near like the low of the day. And then on Tuesday, the January 31st, we had opened almost the same price as where we closed on Monday. Then we made the spike base as support. Spike base was 40.35, around 40.35, and then we made that as a support, bouncing exactly from the prior day settle, like the Monday settlement price, and then closing almost near the high of the day. It was a big short covering rally. And then we formed a new spike, right? So the new spike base was retested on Wednesday. We'd opened the same near the spike base we had opened, and then we broke the 4109 level and then formed a new set of single prints, which means that there are many trapped traders in here which haven't filled yet, and that's why I still have that area as marked as is. And then we had a new spike base on that day, which is Wednesday, the February 1st. So on Wednesday we had closed around 41.34, and then on Thursday we had opened with a gap up. If you notice, we had opened around 41.73, whereas the high of Wednesday was 41.63.25. So we opened with the gap up, filled the gap, and then closed again near the high of the day. These are the single prints that were there from very long time ago. I think back in September. If you notice, they still haven't filled. So if you notice, actually back in August. So these single prints go back all the way to August of last year. We found resistance there and then closed near the point of control, where most of the volume for the day was spent on Thursday. And then today on Friday, we had opened with a gap down, meaning below prior day's low. Below Thursday's low we had opened. So we got a full contraction rally and then back down again below, closing below prior day's low near the point of control. If you notice here, so most of the volume that is traded for the day is around this peak mountain sort of shape here. It's around 4150 area. Yeah, the TPO point of control is also around 4150 area. So we sort of reverted back to where we had opened, but the close was also below prior day's low. But one thing to notice is the value area, the VAH that you're seeing here, 4175, and the VAL, it's around 4139. So this value area is overlapping with the one from Thursdays. Like, how can I say? Okay, let me mark it. So this value area here is overlapping with Friday's value area, which is today's value, and that is why the two-day balance rules are applicable, which means for next week above 4208.5 it's going to be bullish, so you want to position yourself with buying call options or stay long on futures. And then below 4135 you want to stay bearish or stay short, or you can buy put options targeting these levels. And same way, these are the targets for the upside, and within this two levels it's going to be just choppy, meaning sideways price action. It can be just going up and down, it can go anywhere in this region. So it's better to trade the breakout or the breakdown. Just keep an eye on these two-day balance low, two-day balance high. Generally above the mid it's usually bullish, and below the mid it's bearish. I've just marked that just in case if you want to trade like intraday. That's all. Based on the market profile view for next week, two-day balance rules are applicable, but the trend on daily is down because we closed below prior day's low, which is 4153.5. So that's it based on the market profile view. Now let's jump into the candlestick pattern view, starting with the top down approach, which is the monthly chart currently open. The trend on monthly is up because we broke the January's high. I have also marked that in my market profile view chart as PMH. PMH means previous month high, and we are trading above previous month high, so it's generally bullish. So the trend on monthly is bullish. And then let's go to weekly chart. And on weekly also the trend is bullish because we are trading above prior week's high. Let's go to the daily chart. The trend on daily is balancing based on the candlestick pattern view, meaning we looked below the prior day's low and then we closed back within prior day's range, but this pattern looks like a bearish harami. So generally it's a bearish sign. Bearish harami means the red candle is fully within the green candle, so generally it's a sign of bearishness. So it could pull back next week. We're testing this trend line right here. So the trend on daily, to summarize, is bearish but balancing. Bearish being it broke the prior day's low, which is the Thursday's low. Just by a glance, how am I able to tell? It's by looking at the lows here. So the current candle low on daily is 4132.5, as you can see in the small dialog box highlighted in the L section. And then if you move to the prior candle, the low is 4136.75. So about 5 points we broke below the prior day's low. So that's all, guys. I hope you find this video helpful. To summarize again, let me go back to the market profile view. So the trend on based on market profile view is balancing, which means 4208.5 is going to be the line sign for the upside. Above this you want to stay long or buy call options targeting these levels, and then below 4135 you want to stay bearish or buy put options targeting these levels. And then we have many weak levels that formed during this sharp rally, so keep an eye on those. Breakout or breakdown, like breakout or breakdown, and you just want to be in that direction. Thank you very much again for watching, guys, and I hope you find this video helpful. If you did, please give it a thumbs up. I tried to explain elaborately in this video, so it took time. So And I really appreciate you stopping by and taking time to watch this. And please feel free to leave a thumbs up and share with your friends if it did help you and if you learned something new. Have a great week ahead and take care. Bye bye.